All right, so in the past, I have posted photos like this, learn to ride the bull market and become a multimillionaire like I have. And everyone loves bull markets. You can buy pretty much anything and it just starts to fly if there's the slightest bit of volume or news catalyst because there's so many traders who just, want the next hot pick. In a bear market, things are different. And, as we had problems in Greece and Puerto Rico and the markets drop 1, 2, 3%, everyone starts freaking out. And I'm getting a ton of questions like, what am I going to do? You only ride the bull market. Well, guess what? I made my first million roughly riding the bull market, yes, but I made my second and mostly my third million by short selling. Uh, I actually prefer bear markets because while there are less plays to ride up, when there is a good play, it's very quick and very decisive. Because frankly, there's just not that many plays. So traders are looking everywhere for anything that's hot. And when something gets even a little hot, it gets really hot really quick. And in bear markets, there's not as many plays, but you can also understand how the dynamic works. And if you do understand this, then you can time your trades better. I do have to bring up William. He's one of my most dedicated challenge students, William McKelvey. McKelvey. I always mispronounce it. I'm sorry, William. This was his fiance saying, "Thank you for being such a great teacher and mentor. He sure has been investing a lot of time trying to learn as much as possible, and I couldn't be more proud of him." And that's a great fiance supporting um, William. And this is his trade. And this was just a few days ago, 5 days ago. But this is a great example of how to make literally 50% on your money overnight. CBLI, a billionaire invested in the stock. The news came out after hours. The stock spiked from 3 to 350, $3.50 a share. So, technically it's a penny stock under $5 a share. He bought it and he sold it the next morning at 520 and he made $1,700 on a roughly $3,500 investment. I've already talked about this trade a few times, but I'm going to keep talking about it because this is a trade that anybody can do. This was being talked about in the Tim Alerts chat room. Other billionaire plays, I missed this one, but other billionaire plays like PTBI and VLTC, the Tim Alerts chat room really nailed it and broke the news. And then the question is, are you prepared? Do you understand? Okay, there's a lot of news flying around in the chat room. Which news matters? Well, when a billionaire invests in a small company, that matters. And let me just show you the chart of what CBLI has done. So William bought it right here at 350. It was already up from 3, so it was a little bit of a risk. He sold it the next morning at 520. It went all the way to 720. So, he coulda, woulda, shoulda doubled his money. Instead, he made 50%. That's okay. If you look at my biggest profits in 1 or 2 days where I've made 70,000 or 100,000 in a day, I sold too soon both times. My $70,000 profit on EKSO last year, had I waited another hour, it would have been 200,000. ISCO a few years ago, I made over 100,000 in one day as a college freshman, and I locked in the gains right near the market open, and it went, it could have been a $300,000 profit. Same thing with my short last year, shorting $70,000 in profits, which is what I got from CNTO. Had I waited another 2 days, could have made 200,000. I'm not here to tell you, how to try and time trades perfectly. I'm here to tell you to wait for plays like this. And, now this is dropping. I might even dip by it, but, there's really no signs of it coming back just yet. If you remember, SGYP was a billionaire play, and the billionaire invested right in here, and I had a nice buy alert. And the billionaire turned out to be right, as billionaires often do. So I'm watching billionaire plays. I'm not forcing trades. That is the single biggest lesson that you need to know right now. I know that you want plays like, a few weeks ago where you're trading 3, 4, 5 hot stocks per day. That's not the market right now with this uncertainty. And that's okay. If you look at the S&P 500, it's actually red on the year. All of this, the entire year, was for nothing. And we are, maybe break even roughly on the year. I'm up 55% on my accounts this year because I have been patient and because I lock in profits. So when the market changes, I don't change my strategy that much. It's just people's perception of my strategy changes. So I really, really look forward to bear markets. because buy and hold get crushed, diversification strategies get crushed, momentum buyers get crushed, scalpers get crushed. I don't get crushed. Back in 2000 when I had already made nearly $1 million. I made 722,000, I believe is the number, the first 4 months of year 2000. In the last 8 months of year 2000, I lost $10,000. So I didn't make any money, but unlike the Nasdaq and the S&P 500 and pretty much every internet investor, they lost 50, 60, 70, 80%, sometimes 100% of their money. My strategy is very different. It's very strange. You need to have patience and you need to think of yourself as a retired trader. I say this in so many webinars, so many video lessons and DVDs. I think of myself as a retired trader, and I only come out of retirement if a trade is good enough where, I'm looking at the trade, I'm like, oh my God, I have to trade this. If I miss it, then, I'm going to feel guilty the rest of my life. But otherwise, I'm not looking to trade every single second. And in a bull market, that mentality gets lost. People are like, come on, there's so many hot plays. Like, you need to trade. Like, let's see, get some picks, give me something. And in a bear market, there's not as much pressure on me, but people are more desperate. And in the past few days, I've gotten a lot of desperate emails. A lot of people who are like, oh my God, is stock trading over? Is it done? No, it is the exact same strategy as before. I will be a sniper. I will look to play stocks, buy them when they have good earnings or contract wins. I will look to short sell them when they are pump and dumps. Right now we have some blatant pump and dumps, and UGN already had one crash and now it's coming back again because they're still sending out promotional mailers that lie and are very full of propaganda, but this will crash. So I'm watching NUGN. We still have JIDG, which actually got halted by the SEC. It went from under $1 to 8, and then it reopened after the SEC halted it back under $1. Now it's at 450. So it's quadrupled in the past 2 days. So I have two potential shorts right there. My whole chat room banked on SGNL this morning. Congrats to you chat room guys. Everyone was spotting it in here in the twos and selling it in the 240s, 250s, 260s, 280s. That's fantastic. Just be sure to lock in your gains. A lot of people are asking me now, what do you do with SGNL? It's already had its move. In bear markets or, potential bear markets, you have to take the profits and lock them in. In full blow on bull markets, full steam ahead, you can be more aggressive. You can just say, okay, I'm going to hold SGNL and you'll probably be rewarded on day 2 or maybe even day 3. In, bear markets or potential bear markets, you have to lock in the profits and just take them and be thankful for the profits, be thankful for the trade, but you have to adapt your strategy a little bit. That's the only change. It's not like I'm going to lose 50% of my money if the stock market loses 50%. In fact, there will be, quite a few shorts and I'll probably do better. But this is when my strategy really, really outperforms. It's tough for me to outperform in a bull market. I made nearly $1 million last year in trading profits. My students had a record year in trading profits. And this year, started out great. But now with the major averages, going flat for the year and even slightly red, everyone's concerned. I'm here to tell you, you don't need to be concerned if you follow my rules. If you don't follow my rules, be very concerned, okay? If you're invested in mutual funds or, ETFs and you're just like, oh, I'm just gonna buy and hold, well, you're probably screwed because we are due for a 10 or 20 or even a 30% correction. And while it's healthy, long term, many people are scared. So for me, I stay in cash, I stay liquid, I'm ready for new plays. I'm watching plays just like I always do, but nothing really changes. So for all of you guys emailing me, don't freak out. Cash is king. Cash is safe. When you are confused about a trade or when you're not sure, you're like, wait, Tim, why are there no trades today? Like, what's going on? You don't have to trade every day. I have to repeat this to you because people are looking for action every single day. If you're a scalper of, companies like Google and Priceline and Chipotle and GE and the S&P 500 and you're like, trading these $200 financial instruments and you're trying to make like 20, 30 cents a share, I have no words for you because I don't understand you and frankly, I've never met a consistently profitable scalper. what I do, and a lot of people are confused when I have like 5 or 10 cents a share profits, and I'm not happy about it because if I make or lose 5 or 10 cents a share on a stock, it doesn't matter. It doesn't affect my growth trajectory. It's a scratch, you know? I'm not just going to lose money on a stock just so that I can lose 5 cents instead of making 5 cents. But if a stock doesn't do exactly what I want, I get out. And if there are no great plays, I don't get in. So today I have not traded. Today is June 30th, 2015, and it's okay not to trade. The way to really grow your account is taking good trade after good trade. And sometimes the trades aren't going to work out. Yesterday, I bought WYY. They had a multi-year breakout if you look at pre-market. And I just bring this example up because I want you to see that it's okay for a broken trade. You see here, pre-market, it was up to 205, up from 180s, because they had a partnership with Samsung. And that was very good news. I bought it on the dip in the 180s, but when it couldn't really get back to 190s, let alone 2, which would have been, a multi-year breakout above here, above 195, it couldn't do it. So I got out. I made a few cents. It didn't even matter if I had lost a few cents a share. I got out because the trade did not go as planned, and that's okay. A lot of you guys need to understand that a lot of trades just aren't going to go the exact way that you think or the exact way that you want. And, you can get out very quickly. The easiest way to cut a trade short is just exit the trade, whether you have a small gain or a small loss. So a lot of my critics see me making 5 cents or 10 cents and they think that's my goal and they think that I'm a scalper. No. If you ever see me make 5 or 10 cents a share on like a $2 stock or lose 5 or 10 cents a share, the stock did not do what I want. And if you look at all my trades, and I show them all transparently, unlike too many people out there, you can see that the way that I really build my account is when a stock does do what I want. And I don't make just 5 or 10 cents. I make 50 cents or $1 a share or $2 a share. Like when I was shorting JIDG in the sevens and I covered in the fives. And I should have, would have, could have held longer because then the SEC halted it and I could have covered at 1. I'm not trying to predict SEC halts. If I'm up a dollar or I was up $1.50 a share on my short on JIDG, I take it. So my track record is littered with small gains and small losses of 5 or 10 cents a share. And if you add them all up over time, they're squat. They're nothing. The way to grow your account is to be very, very right. And, that's not necessarily an easy thing all the time. So you are going to have to deal with scratches. You are going to have to deal with small losses and small gains. The problem comes in when students do not like having small losses or small gains and they just hold on to it. And they say, Tim, you're in and out so quick. Let me just hold on to it. Let's see what happens. I'm here to play. Come on, let's play. And they let their losses just run tremendously. And that is how you have huge, huge danger problems. And in bull markets, it's okay. A lot of people have huge losses, but then they have a huge gain. So even if they don't lose a lot, they're only losing a little because they have the big gains to make up for it. In a bear market, you cannot do that. If you have a big loss, you will not necessarily have a big gain the same day or the next day or even the same week. And your confidence will, just crumble. Your account will crumble over time and you'll be like, I hate trading. And you don't hate trading. You should hate yourself for breaking the rules that I'm trying to teach you. Because the rules that I'm teaching you, I know they're weird. Trust me, I know they're weird. But, I've learned them over 15 years of trading. I've been in all scenarios. I've been in bull markets. I've been in bear markets. That is the advantage of experience. That is why I'm a teacher. If you've only been trading for 6 months, you're not ready to be a teacher. You haven't seen what happens. And I have. I've seen big losses. I haven't always been this cautious, but as the words of, you know, of experience, I have to show you what I have learned. And in bear markets, you can still make money. You just have to, adjust your expectations. And that's what I'm trying to do with this video. So there's always going to be plays, but just not as many plays. And when there are plays, you're going to have to be ready. So when there are fewer plays like there are today, take time and study. You know, today is the final day to save $1,000 on Tim Grittani's DVD if you go to timgrittani.com. I would highly recommend that. If you don't want that, then watch my How to Make Millions DVD or Penny Stocking Part 2 and review some great charts. When there are no great charts right now, it's okay. You can still just study and increase your knowledge and be ready for when there is a good chart. That's what you can do. So don't be afraid of a bear market. Just adapt to the market environment. If you don't adapt and you keep treating stocks like it's a bull market, you're going to lose. Um, and you know, the good news is we've had a very, very long bull market. We're overdue for a little consolidation. This is healthier long term. We don't want a bubble and a big crash. If we get a 10 or 20% consolidation, I think that would be very, very healthy for the market. And it would give a lot of you guys time to study my DVDs, video lessons, and webinars so you can catch up. I know when there's a bull market, many of you guys are like, I don't have time to study, I'm trading. Well, now you're not going to be trading as much, so you can study and you can be better prepared for when there are good plays. Thank you guys. I'll see you in the chat room.